Hello and welcome to another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Analysts forecast Nigeria's central bank will raise interest rates by as much as 500 basis points next month. And the NGX rally intensifies as the all-share index nears the 100,000 point level. And the Cybersecurity Experts Association of Nigeria warns of impending rise in cybercrimes. Great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. A new report has projected that Nigeria's central bank may require commercial banks in the country to raise their minimum capital base to over 900 billion naira. According to the banking sector full year 2024 outlook released by securities trading firm Cardinal Stone Securities, the projections indicate an increase ranging from 181.85 billion naira for regional banking licenses to 909.27 billion naira for international banking licenses. The report mentions that there's been a substantial decline from CBN's 2005's recapitalization exercise, as the requirements, which range from 0.04% to 0.22% of the GDP in dollar terms, as at that period have dropped to about 0.01% of the GDP in dollar terms so far this year, with exchange rate at 925 naira 34 kobo against the dollar as at January the 22nd. And the Cybersecurity Experts Association of Nigeria has warned of the impending rise in cybercrimes in the country's cyberspace amid the race for the use of artificial intelligence around the world. In its National Cyber Threat Forecast report, the association also said there will be an increase in employment and benefit scams, primarily through various digital platforms, a trend that has been prevalent in 2023. According to CCN, the anticipated surge in cyber threats and scams is attributed to the country's challenging economic situation, which may drive more individuals to seek financial opportunities online. Meanwhile, the association has called for improved cyberspace regulations through public awareness, law enforcement collaboration to control potential monetary loss. And oil prices eased in early trade today as anxiety over the global demand outlook for oil offset geopolitical tensions in the Middle East and the supply worries following an attack on a Russian fuel export terminal over the weekend. Brent crude futures, that fell about 14 cents to $79.92 a barrel, while the US WTI crude was last down about 10 cents, about 0.1% at $74.66 a barrel. Both contracts had settled about 2% higher on Monday as the Ukrainian drone strike on Novatek's UST Luga fuel export terminal raised supply concerns and drove up prices. Analysts say Novatek is likely to resume large-scale operations there within a few weeks. And as the Dangote Refinery commences operations, Nigerians are still hoping PMS prices will drop dramatically. But according to Mr. Bismarck Ruwani, he believes the Dangote Refinery ensures supply, which is critical for possibility of lower prices. Take a listen.
Dangote Refinery is commencing production in another week or so. The products will come out on the market. There's been initial production and everything going into the tanks. But one thing is clear, that there's going to be adequate supply. I think last time we checked, about 33 million liters of diesel will be produced. There's also dual-purpose kerosene. And that the first thing is that there is a question of how is it going to be evacuated to the markets. It's going to be 70% of the evacuation is going to come by marine vessels, and about 30% by trucks that are coming in through Ogun State, Ekpe, so it does not cause any disruption to the Lagos traffic. Lagos traffic is bad enough with the closure of the Third Mainland Bridge. So I think the Dangote Refinery, knowing very well that this is necessary, had made adequate arrangements to ensure that they don't compound the problems of Nigerians in terms of traffic in Lagos and the downtime to the economy.
And according to reports by Estate Intel, Nigeria trailed behind Botswana and Morocco regarding foreign direct investment in the real estate sector. Soaring inflation, a weakened naira, and high cost of production weigh on the real estate market. The report shows Botswana and Morocco ranked at the top of the real estate market attractiveness ranking. Relative currency stability, low inflation rates, and lower construction costs helping those other markets stay ahead. Joining us now is Dr. Oyeleke Ajiboye, MD and CEO, Efficacy Construction Limited, joining me via Zoom. Great to have you on the show.
Thank you, sir.
So how would you describe demand in the real estate sector in Nigeria, in 2023, seeing the level of inflation, currency devaluation, and also a squeeze in disposable income? How would you rate demand?
Well, I think our population still plays a major role when it comes to demand. However, the purchasing power of the average Nigerian has been drastically reduced. A lot of people don't have the kind of income they had. What their income now can give them is relatively lower because of the inflation, because of the credits available now, the high interest rates in the bank and all that. So demand will still be there, be driven by population, but to a large extent, affordability is now what is zero. There's no longer affordable houses. People still want to have a house. Housing is a security in Nigeria. The demand is there, but really the purchasing power is missing.
At this point, we talk about looking at the, supply side. We also know construction cost. According to this report by Estate Intel, said high construction costs in Nigeria is a major issue right now. About $1,700 US per square meter, and that's high, compared to other countries right there. So how are developers, managing to navigate this issue of construction costs and not passing it on? Because at the end of the day, they have to pass it on to the consumer.
Yes. Well, I think for me, a lot of developers are developing faster gray hair now because sadly, sometimes you have, especially when you do off-plan sales, it's very difficult to pass on the cost because there will be no variation. And so to a large extent, there's a lot of problem in the sector now when it comes to developers. A lot of them are struggling to develop, a lot of them are struggling to deliver, and then it's not something that they created by themselves, but it's the economy. So to a large extent, everybody needs to now look at backward integration. What else can I do to make this system for me? But when you look at developers generally that are turning out houses, actually to a large extent, in the last 6 months now, housing development has gone down drastically. FMBN have not been giving out mortgages, so people can't access mortgage. So that also eroded the ability of people to buy. And you also don't want to go and get a loan from the bank at 25%, build a house, and you can't find the buyer. So there's a lot of mix into the transaction now. Both parties are suffering it. The developers are going through a bit of mess. The subscribers who are having issues taking delivery of their house, and this is also each on the state of the economy.
And now we're seeing analysts forecast that, at the first meeting of 2024 for the MPC, that's the MPC committee meeting, they're expecting the central bank will raise rates again by about 500 basis points. That's a jumbo rise there. So at the end of the day, it's still the battle to tame inflation at this time. And seeing what the CBN has done so far, it's still that tightening stance that they have. So looking at it, how are you developers, positioning, for 2024, knowing fully well that rates are still going to go up? Hello, Mr. Ajiboye.
Yes, sir. I think I lost you at one point there.
Okay, yeah. So I'm talking about the forecast now. We're seeing analysts forecasting that the central bank will raise rates in the first meeting of 2024. That's next month, by at least 500 basis points. And rates are already high, as it is. How are you developers positioning for 2024, knowing fully well that rates will still go up?
I think the safest thing for developers in real estate to do now is to just forget about affordability. Real estate is now looking like it's only just for the rich. So property ownership, building is now looking like, if you can't afford it, just leave it, because now everybody has to go back to the drawing board. What you can afford, what you can sell for 30 million naira is no longer going to be 30 million. It's now maybe 60 million times two. But we now see a lot of people also now going into purchase of land and all of that, just to edge against inflation. But in all of these things, one has to still be careful. Developers has to go back to the drawing board, look at their numbers. As inflation is biting in, all fees are going up, labor rates are record high, material prices are record high, government charges on tax, duties are all record high. So there is no way real estate to be lower. Real estate is just going to become more expensive.
And also,
less affordable.
and talking about, trying to hedge at this point, we know, diaspora investors also like to, look at Nigeria's real estate sector. But it seems there's some kind of trust deficit, at this time, because, when you're out there, abroad, you have to trust somebody here to help you, make these real estate transactions real. But how can, diaspora investors be protected, while still, investing from abroad?
Honestly, I think for people that wants to invest in real estate, the kind of due diligence you do for any business you want to put your money is the same thing you should do in real estate. Because in real estate, you can easily lose your money like this. And at the same time, you can actually get 100%, 1000% on your money. So as much as possible, we've said it over time. I like some steps that Lagos State is doing with Lacera, meeting with EFCC, criminalizing people that bring in fake documents, sell fake papers, and all of those things. These are things that will add credibility to the industry. As much as possible, if you also look at Nigeria's real estate, is something that developers, a lot of developers suffer a lot of things because it is the society where we find ourselves. So I'll give you an example. An investor abroad buys a government land. If he buys a government land, government allocated land in a government scheme, which should be zero peace of mind, and after paying all fees, finding it difficult to take possession just because somebody have gone to sell government's land. So all of these things, and I like the fact that Lagos State has land grabbers office also to address such issues. So those things are, there are society problems that affect the profitability of real estate, from fake papers to selling lands with different land use. If your land is for residential, you go and sell it for commercial, you have problem. You will not be able to get a building approval for residential on it. If your land is for agriculture, you go and sell it as residential, you have a problem because you cannot build on an agric land. There's a minimum square meters you can build on agric land. If a land is also meant for forestry, if you sell it for residential, it will remain a forest. So these are the things that will lead to issues and loss of investment and investors' confidence when it comes to diaspora remittances, buying into real estate in Nigeria. So I think the due diligence has to be well done. And I also hope that the Nigerian Bar Association in Lagos will come in also to work with Lacera as much as possible and kind of will look for a way to penalize lawyers that do agreements on fake title documents or title documents that they know are not legal.
And talking about such lawyers, if how do they? Because when it comes to regularization of title documents, you go to the you go to Alausa and you do your search, then you find out if that land is actually legit and something you can actually invest in. But talk to me about the due diligence from the lawyers' perspective there. Why are they not carrying out the process as should be?
Okay, so I mentioned lawyer because I have a present situation at hand. I bought a land from Lagos State government, a government allocated land with C of O 2020. After buying the land, surprisingly, an estate, a lot started hindering our ability to take possession of the land. And somebody wrote to us claiming that he has 4 plots inside that same land and he's a lawyer. And he did a deed of assignment and he's using third party or moneyless layout to say you have a land on government scheme. Is it that as a lawyer you did not know that you are supposed to go to land bureau to go and check the title, go to Surveyor General's office to go and chat it, go to NTDA to go and confirm if you need to confirm, go to the environment, these are the 5 agencies that top notch you have to visit to validate whether your land is in a good place, is not on canal, is not on road. So if a lawyer goes ahead and buys such a land, drafts such a contract for a third party, or somebody in diaspora, and you say that you have sold a land or you have transacted on a land, that lawyer should actually be questioned. And what is the title of this land? There are procedures of obtaining title in Lagos State that are straightforward. It's either you get from the Lagos State government directly, which is direct allocation, or you get a governor's consent, or you buy from somebody that have already gotten a seal of a governor's consent, or through a gazette or excision.
Right, definitely. We're having some network issues there with Mr. Ajiboye, but I don't know if you can still hear me. Mr. Ajiboye there was talking about, getting properties regularized and title documents. Mr. Ajiboye, so I lost you for a bit there, but if you can hear me, talk to me about, when it comes to transfer of ownership and, getting your titles, sorted. Looking at Lagos State at this time, because we've had complaints from investors about how long it takes to, get some of these titles, getting a transfer of ownership, and all of that. Has the process improved in Lagos State? Is there some kind of automation, being talked about or being, used at this time?
Well, as a practitioner in the sector, I can say that there's electronic CFO now. However, there's still a lot of bureaucracy, from getting a governor's consent to getting your CFO, to building approval. Everything is a Nigerian factor. It's not just Lagos State, it's a Nigerian factor. Is the problem with society values that you must be able to do this, you must rub somebody's palm, you must knock one door, you must know somebody to get your paper done. Otherwise, it's just going to gather dust. And before you know it, your file will be in KIV. So there's a lot of bureaucracy on that, truly. But I know that the permanent secretary of land is really working on that. The last permanent secretary, the present one, they are looking at ways to simulate it. And in this process also ensure that they knock out people that are coming in to do fake papers. I almost fell a victim a couple of weeks ago. Somebody was to sell a land for us for an estate. They had original CFO. We went to Lagos State government. We got 3 certified true copies for different purposes to do our search. Everything until we went to one of the 5 agencies I mentioned, entity, was when we got there, they spotted the difference in the title and said this thing is not legit. So imagine me as a developer falling victim of buying a land that is fake CFO and I did not know. Imagine what the third party. This is the things that I think government is trying to work on. That's why the bureaucracy is so much, because there's so much fake documentation out there that you really need somebody in the government to identify and tell you this is fake, this is original.
So what would you say is the fastest way to identify a fake CFO?
Well, I can't identify, but like I said, you have to go through all those agencies. From lands, the lands will check the title documents. They'll look at everything. If I ask for the file, see all the processes from go to NTD. NTD will check if it's from them or if it has anything to do with them, if they have an approval. So the general will chat it that it's not on somebody else's land, it's in a free area, it's not committed. You go to environment, it's not on drainage line, it's not go to physical planning. So these are checks that we also try to do to ensure that. So if you miss one line, you can be in trouble. That's actually the essence of it. So you can't just do a search in one place and go away.
So now it's gone beyond searching in just one department. You have to go through different, and I'm sure that's going to cost you more at some point.
It costs more, but the liability is what you save yourself is so much compared to the liability. Imagine someone parading a CFO, also another instance that I'm aware of. Parading a CFO that has been revoked like 5 years ago, but in the lands bureau is still showing that you can still obtain a CTC. So if you transact on that and you go and sell to third parties, it's just going to be a cycle or a chain of problem. So.
And definitely, at this time, we know that a lot of people are going through a cost of living crisis, and affordability, in the real estate market is a very big issue. What would you like to see, from the government to kind of assure Nigerians that somehow we can afford to, put a roof over our heads, even if it's renting or buying? What would you like to see from the government to actually make affordability a reality for the average Nigerian when it comes to real estate?
I think I would like to see the government be serious, intentional about mortgages, reducing the interest rate for mortgage. Let Nigerians be able to sincerely afford mortgage. Let them give them low interest rates. Let there be much more reduce interest rate to procure real estate properties. Material, let them give lower interest rates to manufacturing companies. Let cement price come down. Let reinforcement come down. Let there be palliatives for these people. That way, too, the common man will feel this. I'm not happy an organization becoming a $10 trillion company, and yet we are losing money. Things are so tight. The government should be able to step in there, provide some leverages that will affect the common man in these ways.
All right. I guess 2024 just started. Hopefully, we can get the housing market straight so that everyone can somehow be able to afford, to put a roof over our heads going forward. Thank you so much for coming on, Dr. Oyeleke Ajiboye, CEO, Efficacy Construction Limited. Thank you so much. All right, so next we head straight to the market. We see the NGX All-Share Index nearing the 100,000 mark at intraday today. Details after the break. Do stay with us. All right, let's head straight to the markets. Now we have Anita Edit with details. Anita, it looks like your wager seems to be getting closer of 100,000 points for the All-Share Index. Big move up, 3.23%. Intraday, huge. What's going on?
Ladi, I can't wait to have my money. I like money. I don't know if you do, if you like money, but I do like money.
Yeah,
I like to put it in investments.
Yeah.
Exactly. Yeah. So I think you can see on your board here that it's not just 98,000, it's nearly 99,000.
This is meager 2,000
exactly, 98,860.88. So if it follows, if it continues with this trajectory, if we add an additional, let's say about some almost 1%, we'll be talking about a 99,000 points.
Quite incredible.
And
we just see this day so fast.
Exactly.
For the All-Share Index.
And this is just the second trading day within 5 trading days this week. There's no holiday, so we still have about 3 days and then some hours before the closing bell, which is at about 2:30 later today for Nigerian stock market. And it is still the world's best performing stock market, overtaking
2024.
For 2024, and it's just January.
Wow.
Exactly. So, and of course, let's talk about even the Billionaires Club. They're there. We have the Millionaires Club. So, some class of investors, forget about the valuation of the Naira, but it also tells you that there's much return on investment. So, if you put your money here in Nigerian stock market, whether you're a local investor or a foreign investor, there's money to be made right here.
Just hope you don't buy the top.
Exactly. But trade the market with caution.
Then when it gets a pullback,
exactly,
you're holding a bag.
Exactly. You just have to share. You can't eat your cake and have it. You just have to share in both the profit and the loss.
Right.
So now let's dig into the details for the intraday trading session. Like we were just bantering just a couple of seconds ago, our stock market, although it's still fluctuating in between the 98,000 points, but very much comfortable there. And that's just yesterday we celebrated. It was our headline that it was 95,000, but here you have it at about 98,000. And of course, I wagered that it's going to be at about 100,000, but I don't have a control of all the market. It's just a projection, of course, a projection in the right direction. So now, when we talk about the trading day Africa, the African stock markets, these were the two best performers at intraday for Tuesday. But let's take a look at the flip side of that market, where we see for the Egyptian Stock Exchange, it was a pullback for that market, 1.49% pullback, but it's still within the 27,600 points. While Kenya was it closed on Monday more than 0.4% down. That's it for that market. But now, still talking about Nigeria's stock market, which is still being celebrated around. Let's talk to Nabila Mohammed, who's an equity trader at Chapel Hill Denham. We'll talk about first the earnings, where maybe there's a flurry of earnings to report, as well as the drivers for this market. Thank you for joining us, Nabila. Hello, Nabila, can you hear us?
Thank you for having me. Good afternoon.
Good afternoon. Now,
I can hear you very well. Can you hear me?
Yeah, I can hear you. Yeah. So nice of you to join us. Now, I think I have about 3 questions for you, but I'm starting first with Nigeria's stock market. We saw Dangote Cement. That's the market's biggest, that's the most capitalized equity on the Nigerian Stock Exchange, with about 10.09 trillion naira as the close of Tuesday's trading session. And then we also saw the news of a fellow billionaire buying more than 6 billion naira worth of shares in that industrial cement giant. So can you tell us what is, how is this impacting on the market, as well as other stocks worth over 1 trillion naira as we speak?
So currently, the market is up. Market is up largely as a result of how Dangote Cement has traded so far. The entire market is up 2.8%, and it is largely as a result of the industrial and the oil and gas sectors. For context, the industrial sector is largely driven, of course, by Dangote Cement, and we have seen that it is because of interest that the billionaire, as you referred to him, has taken up in that stock. And we even see that if there's anything, the history of how he, aggressively buys stocks that he's looking at, if anything like that is to go by, we'll definitely see him more aggressive in terms of acquiring the shares. I think his goal is largely to push his acquisition or holding to around 5%. And if that happens, we'll definitely see Dangote Cement continue to close, if possible, 10-10 for now the rest of the trading days this week. So currently, the stock is up 9.9%. It has traded as high as 651 naira intraday, just looking at how the intraday trades have been. And we are still seeing a lot of buying interest in the name. So we will definitely see that the market is likely to close positive, and it's largely as a result of this. Aside that, other stocks, as you mentioned, we have Seplat as well, is also up 5.28%, and we've seen intraday trades for Seplat reach as high as 2,700. We are still seeing, in fact, we see the stock on full bid. People are really buying into that stock, and of course, positive news flows around how they are looking to double their revenue in terms of the annual gas plant that is 95% complete. Is just positive sentiment that's driving our foreign interest in that name. Aside these 2 key stocks, the general sentiment in the market is largely bearish, because we have seen that investors are starting to take profit or starting to book profit in the banking sector. The banking sector is actually down currently 3.3%, and largely we've seen profit taking across major names. We've seen it across GTCO, Zenith, Fidelity, FCMB, UBA have all some form of losses, so have experienced some form of profit taking in the market so far. So general sentiment is bearish, but we still see interest in Dangote Cement and Seplat currently that is keeping the market in the positive at around 2.85%.
So quite impressive. Now let's move a little bit away from Dangote Cement and talk more about the earnings. Recently we saw Unilever releasing its earnings results, which is for last year. So now let's talk more about earnings this time. What are the latest earnings, and how has that also affected the markets as we speak?
So the earnings we've seen so far, Unilever truly, and they reported a very good revenue growth of around 51%. We even see that they are in a profit, unlike some of the other peers that had 9 months in a loss, like Nestle, like Cadbury. And generally speaking, I feel like the sentiment around the consumer goods space is quite good. In fact, if I'm just speaking to how that sector has trended since the release of the results, we've seen that there's interest in PZ, in Unilever. The entire sector currently today is up 2.12%, even though it's largely driven by Boa Foods. And I just feel investors are already starting to take positions in these names, largely as a result of the fact that when they start to release earnings fully, when we start to see audited financials being released, we will definitely see some better improvement and work around how they intend to address their FX issues. But all this year is envisaged to be a good year for the consumer goods sector, because it will be like a rebound from the low base that was recorded in 2023. So Result season is always one that we see investors take positions in stocks, especially stocks that are good with dividend. So we'll definitely see some, even though the banking sector is down today, we'll definitely see other investors take positions in there, and largely as a result of the dividend that they would get. They will also take position in names that would also give them good yields when it comes to the result. For now, we've only seen that Unilever has released this result. We are still expecting more to come in, and we are positive that when we see those results, we'll definitely see some market activities spring up again.
Okay, so of my final question, just in 60 seconds before I let you go. Now, we've seen the market cap at the all-share index at 98,000. So, and we have just about 3.5 trading sessions left. So what's the possibility of we seeing 100,000 level for the market this week? What's that possibility?
Very possible, because the first stock to have reached the 10 trillion in terms of market cap. So when we continue to see that interest in that stock for the rest of the week, we would even cross the 100,000 before the week runs out. So we're already at 98, and sentiments are already looking like these two stocks that are heavyweights in the market would likely score that, move the ASI to those levels. So it is not an impossibility. It is very possible that we will hit 100,000 this week.
Oh, well, thank you so much. We really appreciate your time and your analysis. And of course, our eyes are always on the market to see where the pendulum swings. So thank you so much for that analysis. That was Nabila Mohammed. Okay, thank you. That was Nabila Mohammed, equity trader at Chapel Hill, Denham. Give us details about the Nigerian stock market. Now, let's move over to the Middle Eastern market. We see mostly negative sentiment, but it was only the Dubai's index, the Dubai FM, that was the only gainer at intraday. It was up by 0.47%, as you can see on your board there, and about the index level at 4,100. For the other side of that market, we still see reds across the board. Saudi Stock Exchange, the Tadawul, 12,075.58%, down by almost more than a quarter of a percent, and as well as the Qatari Stock Exchange, down by a tad, 0.07%. Let's move over to the US stock market, where we see the stock futures. The stock futures there, there's still little change. We saw that the stock futures, the Dow, it was down by about this point there, 0.05%. What we see for the Standard & Poor's, we see the 0.04% increase, as well as just a tad there for the NASDAQ futures. Then, of course, we had seen the Dow Jones had hit about 30,000, the 38,000 level. For recently, it was the S&P that had hit a two-year high. But for the Dow Jones Industrial Average, on Monday, we saw it hitting the 38,000 points for the very first time. So we're seeing new year, new highs for many of the markets. Nigeria stock market taking much of that lead for that market. Let's move over to the Asian markets. For Asia, we still see mostly green, except for the Japanese stock market index, the Nikkei 225. That's the 225 stocks listed on the Japanese stock exchange, where so many of them, we have the Sonys there, you have the Nippon America. So it was down by 0.08%. The Kospi, South Korea's Kospi index, down, up by 0.58%. Quite impressive there. But the biggest was for the Hong Kong Stock Exchange. And speaking about this Hong Kong Stock Exchange, it has been overtaken as the world's fourth largest stock market by India's Bombay Stock Exchange, the India stock market, which is now the world's fourth biggest stock exchange. And that's all thanks to a strong inflow, as well as the firm GDP growth forecast on the country and a manageable level of inflation, as well as political stability in India. So that has overtaken the Hong Kong Stock Exchange as the world's best. Now, we're talking about the Asian market still. For Shanghai, it was up by 0.53%, as you can see on your board, as well as the Australia Stock Exchange. also up by about that margin. So, Ladi, it's all impressive numbers for stock markets. People are putting their money where the mouth is, and of course, the market is responding.
And I'm wondering, what's in it for the fixed income market in 2024, even though we're seeing stocks did so well, in 2023, and they're already starting 2024, very well. But bringing it back to the NGX, now we're seeing the banking counter, that's been pressured since last week. We're seeing a lot of sell pressure, profit taking, in that counter. And I'm wondering where investors packing all of those funds into. Is that going into the industrial or moving away from there into the oil and gas counter? Because we're seeing those counters do well at this point. Remember, the oil and gas counter is either unchanged most of the time, in 2023. Yeah. So how are you seeing, all of this? And after 100,000 for the oil share index, what's your crystal ball telling you?
Well,
what's next?
My crystal ball, I think my crystal ball is back again. It was a little bit dusty, but I think giving it a rub, it's back in its good predictions. But the prediction is that it's going to have a pullback so that the market doesn't have what you call a bubble. You understand? Because at some point, the breakneck speed at which this market is going, it's really scary. But at the same time, the fundamentals are there, particularly the drivers where you have the industrial, the Dangotes, the Bois Cements, as well as some other non-banking
all the billionaires
equities
playing in the market at this point.
So it wouldn't be surprised that many people are taking their money, what you call maybe a portfolio rebalancing, so taking their money from one side of the market to the other side of the market, particularly within the equities
market. And we see at intraday, the banking counter is already down, at this point, so they're still profit taking there. Thank you so much. Yeah, thank you so much, Anita, for giving us the details there from the local market. Well, let's get a check on what's happening in the UK now in markets there. We see Juliana joins us from our London studio. Great to have you, Juliana. So we're seeing the UK government borrowing came in sharply lower than expected. That was in December. Why is the UK government borrowing less? I don't know if you can hear me, Juliana.
I can hear you. Can you hear me, Laddie?
I can hear you loud and clear.
You can hear me loud and clear. That's great. Really good news for the Chancellor. He's got a lot of billions to be able to spend when we head in.
All right. I think we have a little connection issue. Okay, Juliana, I lost you for a moment there, but I can hear you now.
Can you hear me, Laddie?
Yes, I can hear you now.
Okay. Shall I say the same thing for the third time?
Of course. Why not?
Let's say the same thing for the third time, which is that the Chancellor of the Exchequer, aka the Minister of Finance in the UK, Jeremy Hunt, year, and the Conservative government want to give away as much as they can. They haven't been able to give away as we would expect from a typical Tory administration because, of course, we know the budget deficit is huge. Budget deficit being the difference between what the government generate, mostly through tax receipts, and what they spend. And it has narrowed significantly because borrowing in the month of December so it fell by 7 billion if you want to compare it to what it was this time last year. I think the government borrowed about 11 billion pounds. And this is good news because, of course, we know that the government spent so much in previous years on supporting households,
All right, so it seems the connection is getting even a little worse there. But Juliana, so I guess it's looking really, the connection is not really stable, at this point. But I don't know if you can hear me, Juliana. Yeah, okay, yeah, you can hear me now.
I can hear you, laddie.
Fantastic. So let's try this again. So we're seeing now more than 2 million UK prepaid meter users are said to be cut off from the gas or electric supply this winter. What are you hearing about this? Why are they being cut off?
Yeah, this has been a warning that was raised by the Citizens Advice Bureau. The Citizens Advice Bureau is basically a charity organisation providing confidential advice for people in vulnerable situations. And they believe that this could be the case, the fact that 2 million households could be cut off from gas and electricity, because Ofgem, which and forcibly install these prepayment meters. Now, if you use gas and electricity in the UK, everybody does, we have to, you have two options of payment. One is by a direct debit, which is much cheaper and is the preferred method from suppliers. And the others is that you have a box in your wall and you basically top it up with a card or a key. Now, one of the reasons why suppliers only use gas or electricity if there is money on your card. So, of course, charities are really concerned because what if you don't have enough money on your card? Are you not going to be able to use gas and electricity? That is the concern. And I believe a High Court last year basically put an end to this forcible instalment because people are still suffering from the pandemic, but now it's been reinstated. So, yeah, there are concerns from charities that, look, you know, what if people don't have enough money? Are they going to go without gas and electricity? So perhaps we'll get some government response later in the day.
Yeah, definitely. We'll keep tracking that. But how are the markets looking in the UK?
Not great. Red is the colour of the FTSE at intraday. The all shares down, laddie, by 0.02%. In fact, the FTSE 100, the UK blue chip index, and the local market, FTSE 250, all down by the same amount. Excuse me, by 0.08%, but down against the Japanese yen at intraday by 0.14%, laddie. Next time we should try some sign language or lip reading. I think that will work.
Yeah, I'm definitely, I know I'm pretty good with lip reading there. Thank you so much, Juliana. I'll catch you again tomorrow. All right, now let's take a look at what's happening in Europe. Now, we see for almost 2 years now, Russia has led an aggressive war against its neighbor, Ukraine. Western countries have sanctioned Moscow in many ways. One measure is the freezing of Russian assets. Now, Russia warns the West over how much they stand to lose if they don't stand down. Well, Lars Halter is with DW and brings us the details now. So, Lars, what is in the news from Moscow?
Thanks for having me, Ladi. Let me start by acknowledging where the news comes from. That would be Russia's state-owned RIA news agency. So we're obviously dealing with a rather direct message straight from the Kremlin. Now, RIA says that the West stands to lose assets and investments worth at least $288 billion and now we're getting into the background, into what this is all about. So the West has obviously frozen Russian assets over the past 2 years, and it wants to give those assets worth around $300 billion to Ukraine to finance rebuilding that country and its infrastructure after the war. Russia says if that were to happen, they would confiscate all Western-held assets within their borders, and those would be worth around $288 billion. Now, the largest single amount is formerly held in Cyprus. Hard to even imagine what money that is and who owns it, considering the island nation's reputation as a money laundering hub. But then there's also 15 billion worth of assets held by the Netherlands, 17 billion by Germany, France and Italy hold a lot. Among G7 countries, there's also billions in assets held by the US and the UK, by Canada and also Japan.
All right, Lars, but what kind of assets are we talking about here?
Well, it's largely all the foreign direct investment that has flown into Russia over decades. Much of it is owned by Western corporations, and much of that is already gone, as Western countries left Russia almost 2 years ago. Actually, you probably remember some left within a few short weeks after Russia had marched into Ukraine. They left behind factories, power plants, stores, machinery. Just think of all the former McDonald's restaurants that have basically been transferred over to a Moscow-friendly businessman. Or think of car plants. Just this week, one businessman with ties to the Kremlin has taken over all of Volvo's investments in the country. Then, of course, there's also shares by foreign investors. Most of those were never easily available to begin with. They had to be acquired by way of depository receipts, and those seem to be worthless already. There was a deadline last summer when Moscow told investors to exchange their holdings for real shares, but of course that was all but impossible to do, so investors essentially forfeited whatever assets they had been holding. Analysts have long agreed that there is no chance that money will ever come back.
All right, what are investors looking at in today's markets?
Yeah, there's lots of movement today. Wall Street had another record day yesterday. That's after a surprising change of mind there. For weeks, markets were driven by investors' hope for interest rate cuts that might not actually come anytime soon. Now the mood has kind of turned, and investors are focusing on their optimism about the outlook for the U.S. economy. And that, again, is good enough for some gains. Meanwhile, today, this morning, Asian markets are hot. Hong Kong saw its Hang Seng index jump almost 3%. That after Chinese Premier Li Qiang called for more forceful measures to support China's battered stocks. So that gave investors some confidence. It's unclear what exactly Beijing is planning, but Bloomberg has reported now that policymakers are planning to raise $280 billion to inject into markets, and that definitely translated to some strong market gains.
Lars Halter, thank you so much for the update. All right, let's take it on to Southern Africa now. See, South Africans are getting poorer as the country's population continues to grow while its economy stagnates, meaning there's less money to go around. This is revealed by the World Economic Forum in its Future of Growth report, which outlines the competitiveness of economies worldwide. The report showed that South Africa's economy is not competitive on the global stage. The president of the African People's Convention, the APC, Dangote, echoes these concerns, emphasizing the need for South Africa to undergo a fundamental change in its economic model. Take a listen.
Now, their prognosis of the South African situation is correct. We have had jobless growth in this country. Unemployment, poverty, inequality, and hunger have been very persistent and consistent in our socio-economic situation, primarily because the economic model that the country is pursuing, it's a continuation of the colonial setup, which was set up to ensure the continued profits of foreign capital and local settler capital at the expense of the majority. So yes, they're correct. The population is growing, people are becoming poorer because the current system as it stands has been so designed to ensure that the majority will remain impoverished. Only a few minority will benefit from the current economy. We can't bounce back on this current system. The only hope we have is if the current system is dismantled, is changed, we have a new economic model that responds to the challenges of our country. The reason countries like Vietnam, like China, like Iran are able, or Russia are able to make progress is because their economic model responds to the challenges, the historic challenges of their countries. In our case, our current model responds to what London and Washington and Brussels want, not what the people in the country want. That's why we have not made it. I mean, look, since 1994, when we made that democratic breakthrough, the levels of inequality in our country have worsened to a point where last year the World Bank declared South Africa to be the most unequal country in the world.
All right, that was Dangote there, African People's Convention president. All right, let's head straight to the crypto market now, where it's still blood on the street right there. Red is the major color, just like yesterday. That's what we're seeing again. Just a few pockets of green, but much more than we had yesterday. Talking about the pockets of green, just Leo and the towel there, but it's majorly red with big drops from Ethereum, 6.49% down. So the profit taking intensifies. Bitcoin losing that 40,000 psychological level, 4.33%. Analysts say the next level to watch, you'll see if 38,000 holds at this point. So we're seeing crucial support zones being broken at this point. BNB is not left out, down about 5.2%. Let's look at the sentiment in the market now. We've been used to greed in this market, but it's no longer a greedy market at this point. If you look at the sentiment, we're now back to neutral after many weeks of being above neutral in the greed zone and touching extreme greed at some point. So we're seeing big pullback there. I'm talking about investors getting more afraid in the market as Bitcoin has lost a lot of its value post ETF. And definitely, you know, when there's fear in the market, there's going to be a lot of sell-offs. Let's look at the top cryptocurrencies we track now. We see Bitcoin there, that's $39,116 at the intraday there, 4.33%. Cardano is down about 6.48%. So we're seeing big drops right there this afternoon. XRP, 51 cents. Down 4.17%. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide. Great to have you.
Yeah, thanks for having me, Ladi. Good afternoon.
Right. So, it's still blood red in the crypto market, even though we're seeing the NGX in price discovery at this point, hitting new highs. But in the crypto market, it's profit-taking post ETF approval, Bitcoin spot ETF approval. How are you seeing it?
I think is standardly expected. Just like rightly said, if you look at it from a fundamental and behavioral perspective, excitement is now going to equity market, the NGX, the Indian stock market, and the US stock market rallying high. Recently, the Indian stock market broke the 4 trillion market value, becoming the 4th most valuable market. So investors, particularly right now, are more equity interested. Coming to the crypto market, the sentiment has faded despite the approval of Bitcoin spot ETF. And we've seen Bitcoin losing $10,000 from its January high. You know, I recall that Bitcoin hit as high as 49,000, and there was speculation that it might break the 50,000 resistance level, but that seems to be far-fetched. So what we are seeing right now is that investors are reallocating their portfolio. We're seeing the liquidity influx also reducing, profit taking at its high. Grayscale's Bitcoin saw about 2 billion out of its portfolio. We also see the fact that perpetual futures in the crypto market is also negative. We're looking at it that investors from traditional spectrum where the spot Bitcoin ETFs will come to play, we've not really seen that magic, because right now these investors, these institutional firms are trying to even reduce the transaction cost on operating a spot just to attract investors. So, Ladi, right now, I think Bitcoin is losing its shine, but you can't still take away from the crypto asset. 160% last year is still looking decently around the 40,000, despite the fact that it has dropped to 38,000 as we speak.
Right, and definitely given about 160% profit in 2023, definitely some kind of pullback would be expected. I believe the markets would look for any excuse for profit taking, isn't it?
Exactly, and you know, the narrative around the US Fed that the interest rate cuts might not come as early as expected, and the fact that the dollar is also picking up with interest in the US market definitely would keep the bulls in the crypto market at bay.
And looking at FTX, they're back in the news at this point. We're seeing sale of Bitcoin futures there from FTX. Is this also weighing on the market?
Definitely. FTX is trying to take profits smartly off the table. We recall that they definitely have to pay the government, creditors, and customers, their funds. So I think allocation around sales of those things too will influence price. But, if you look at Solana, for example, where FTX has a physical position, FTX has fairly done well. FTX is up by 8 times, even yearly, if you look at on a yearly return, though it's cooling right now. I think sentiment right now is more about how the Bitcoin spot ETF will it be a success. But right now, I think excitement is not in the crypto market. It has moved to equity market, Ladi.
Right, the excitement has shifted, according to Lumde from the crypto market. Thank you so much, Lumde. Always great to have your perspective.
Thank you for having me.
All right, so let's take a look at quickly now the top gainers this afternoon in the crypto market. We see FTT single-digit gains, 8.49%, managing to see some buy pressure there. SWI, that's $1.07, up 3.0%. Let's look at the top losers right there. We see ASTR, double-digit loss, 16.05%, 15 cents down. Celestia, one of the new ones, 10.00%. So we're seeing big drops. Optimism, not looking so optimistic at this point, $2.84, down 8.45%. So that's how the markets are looking today in the crypto market. It's still blood red at this point. That's the show. Thank you for watching. Don't forget you can visit channelcv.com for more updates. You can also watch this again on our YouTube channel later when it's uploaded. I'm Ladi Williams. Thank you for watching. From me and the team right here at Channels HQ, it's bye for now.